Hello and welcome to the Investing Master Series. My name is James Boyd. We welcome you on this November 25th. Yes, 2 days to Thanksgiving. Probably already got your turkey out, or should have, or could have. And hopefully, the question was asked to me, what is your favorite dish of Thanksgiving? I'm a fan of turkey, gravy, stuffing, mashed potatoes. I'm getting hungry already. Just want to wish you and your family a happy Thanksgiving. Have some fun together. My family's all getting together, so hopefully it'll be a good time. But you know how family is. You could never forecast what could happen when all the family gets together. So take care of yourselves. All right, a little fun there. Hello, Debbie, KP Fishing, Lido Len, Thea, many others. Let's go ahead and get started now. Remember, there's my X handle there at James Boyd CS. Kind of mentioned yesterday, I'm not going on any vacation. Okay, my family's going on vacation, all of them, outside my son and myself and the dog. So I will stay here while they go vacation because, well, when I've been gone, the market goes down. So I want to stay right put in this chair and try to help the market go up and iron that green shirt as long as possible. Now, just remember when we talk about stocks, which we will also talk about options, remember that options carry a high level of risk, not suitable for all investors. Also remember the information here is provided for general informational purposes only. Also remember that Schwab does not recommend the use of technical analysis as a sole means of research. Other types of research like fundamental analysis, intermarket analysis, macro analysis, very interesting, just as interesting as technical analysis. And also remember that the paper money examples will be in the software application. We're going to use that for educational purposes only. Remember that investing involves risk. And also when we talk about examples, they are just that. Short options, those can be assigned at any time up to expiration, not just at expiration, because that is a standing obligation. These are American style options that we talk about, okay? If it was European, it's only at expiration. Now, also remember when we talk about those examples, they are just that. Now, we'll talk about the market conditions. JP asked the question in the chat, like, what are we going to master here today? Today, we want to master our emotions. And emotions can really do a little toll on us where we kind of get on the wrong side of the market, and the emotions can smear what we're reading on the charts. Now, what I've also done here just real quick is we've had some questions come in. A lot of times I'll kind of repeat back to the class, like what was the class question? I think it's going to be helpful here. I'm going to write down the question there, and that way everyone can see it. We'll get to those in just a moment because I want to answer those. We'll also talk about kind of some examples, like when we talk about markets. I want to talk about year-to-date performance so far on the markets, the sectors, kind of see where those trends are and where they could be shaping up for year-end, perhaps. We'll talk about sectors, Dow, NASDAQ, S&P 100, and 500 examples of stocks and options in rebuilding a portfolio. Now, what I want to do is just real quick, let's kind of bring up the kind of where we are. And this is just the index list, okay? And what I want to do is this view kind of really tells us a lot of information in one view. Want to look at the year to date for just real quick, okay? So when we actually look at the S&P 500, 14%, NASDAQ 17.9, Russell 9.56, Dow Jones 10.3, okay? Now, another important column is what's the trend? Now, last week when I was out of the office, I mean, it was just trend one all down the table, okay? That's not the greatest number, okay? Especially if you're in positions. We got Dow that is in trend two. Trend two tends to be the shortest because that is really a bullish reversal. So it's where you've made lower lows and lower highs typically, and all of a sudden you start to reverse back to the upside. That trend two is the earliest stages of reversal after a pullback. All right. Now, again, it doesn't last for very long, because if people start to see reversals, the bearish traders, the smart ones, they tend to get out and they cover, and the bullish investors have been waiting to get in, they try to buy. So you get a little double whammy effect. Trend three for the Russell, okay? And you're going to see on the NASDAQ, kind of noticeably, you're seeing the NASDAQ in trend one still. Now, when we talk about NASDAQ, you got to say semiconductors. And boy, what a rude awakening today for the semiconductors. They've been under pressure. They're still in trend one. We saw today Meta actually picked the Google chips, not NVIDIA chips. NVIDIA down a solid $10, AMD down as well. And so you got SOX and NASDAQ kind of lagging the others. And when you kind of take a look at, if we talk about a weekly chart, you're going to see that these are all kind of in pockets of consolidation. So if we're in trend 4, it kind of lets us know, if we looked at a weekly chart, it's kind of like in a range. That's what that's telling us, okay? If it's in trend 4, there's a prior high or 2 highs or 3 highs where we're just kind of consolidating. And on the weekly chart, if we were to, let's say, drop down, let's say, to a fresh new low, you'd be going into trend 5 or 1. Haven't seen that yet on the indexes, but that's something to watch. Also notice right here on the 10-day hole, the 10-day hole is just telling us the color of the moving average. That's why it's green or red. Second, the number in the box represents the number of days the moving average has been green or red. Now, what you're going to notice is we kind of got some early budding signs of maybe the price trying to go back up. Some of these, if we take a look at, let's say here, that's where you got the 10 and the 20 actually green, 10 and the 20 green, and so on, 10 and the 20 green. Clearly, to get more confirmation, you want to really kind of see the 10 and the 20. The second thing to kind of notice here is if you look at the moving average crossover, that's just more confirmation. If we're going to kind of get more push to the upside, which, by the way, not saying this is going to happen, but if you're a bearish investor and you like to go short stocks and you like to buy puts, things like that, usually on lighter weeks of volume, can be tough. If we're a bull, and we're not saying the market's going to go up, it might be the best case that A, it's a shortened week, 2, it's a lighter volume week, and 3, you got time decay. And by the way, if you short sell stocks, there can be time associated with that as well, the cost of the borrowing. The biggest actually thing is if just bulls could get a little lift off the ground, we'd like to kind of see more of these crossovers right here on the right-hand side to show more confirmation, not just in 1 or 2, but multiple. Now, when you look at these charts, let's start with the Russell for just a moment. Russell, what does it look like? That's what it looks like. Now, one thing we want to kind of notice here is when we get the pullbacks, those pullbacks, if we're talking about diagonal lines of resistance, if I draw a line like there, if I draw a line right here, now the problem with the upper line is which line had more touches? It's the lower line. That's a pretty good push back to the upside on small caps. Now, if we're talking about risk taking and the market going back up, that bullish sentiment needs to typically come through one of 3 areas. Number 1, NASDAQ. Number 2, SOX. Number 3, Russell. Okay? It's going to come through one of those 3 areas typically if we're going to get a move. Now, if we said what sectors we would actually say on the back of that, if we include sectors, we would actually say with that the discretionaries, and the 5th one would actually be consumer communication services, the $IXC. But the top 3, NASDAQ, SOX, Russell. Now, right now, you got the top 2 down, okay? NASDAQ and semis not moving. Seeing this go up is a better sign. We'd like to also see discretionaries. Since we're talking about that, let's just bring it up. IXY, you take a look at the sector, getting a little push as well. That's welcomed by bulls. And the $IXC finally getting a push after touching a fresh new low about 4 or 5 days ago. Now, so quick comment just real quick, and let's kind of go into this. The one question that was asked was, if you go to this page right here, if you said, where could we actually see those scripts? It's right on my page. So if you go to that X, right at the very top, anything that you would want to maybe grab and then we use in class, the scripts are in the blue. They are case sensitive. If you use something like Snagit or some way to grab text, you can copy and paste. I don't do that, even though you might use Snagit or something like that. I just type it in, okay? But it is case sensitive. Now, the other thing is when we go back to, let's say, NASDAQ, what does that look like? NASDAQ is, well, it's down in that lower range. We fell back inside the old channel. If we said, is there any positive? Well, one positive we would actually say is it's at the top of the range. It's trying to put up a fight. Now, if someone would put in their order, don't know who that is, it might knock it up through the resistance line. Now remember, the diagonal resistance line is created from what? What is it created from? It's created from lower highs. If you're going to get the trend reversal, it's going to need to actually get the price not to just make another lower high, hence stay below the line. You're going to need to see price go above this line, okay? And the answer is we haven't yet, but we're trying to kind of heal ourselves after the big, nasty red candle. Now, the one thing I want to kind of say just real quick, Dow Jones, not looking that bad. Not a crossover yet, but it's pinching, okay? If we pull up these charts and say, what does this look like maybe on some slower moving averages? These moving averages, they're not as fast as the whole moving averages. This is your standard 30-day simple moving average. We're sitting right here. You're going to see that 10-day exponential, which is not as fast as a whole. You know, we're kind of sitting right there. We're trying to bounce. Now, the past couple times that we've been in this vicinity, we didn't stay here very long. You know, we probably had a 2-week period, maybe 2.5 week, where we actually stayed down there. We were only in that trend 1 condition for 3 days. We were in that trend 1 condition for about 7 days. We were only in the trend 1 condition for 1 day, and about 5 days so far. So the lesser amount of time that we're in that trend 1 condition, the stronger actually the momentum and the trend is. So we don't want to camp out here for 3 weeks, because if we actually drop down in price and all of a sudden we're down near where these support areas are and no one's buying, it's increasing the chance that the price could even go lower. So we're at a very sensitive time right here in the market. There are some stocks, they do not look good. The trends, they've been down, they broke down, and they look like some of these stocks could even go lower, okay? If we're just being brutally honest. Now, I want to kind of just pull up just real quick a couple sectors, fast fire a couple. What in the world is going on with healthcare? Okay, now I just want to I want you to kind of remember this. Healthcare was non-existent, okay, for many months. The market kind of goes into some volatility. The sector that was down and not even participating, lo and behold, starts to go up. Kind of classic, actually. The other areas that actually were up start to fall down. They take money from those areas, profit take. They go to other areas that maybe haven't moved yet, and then actually start to buy them. Healthcare actually a brand new high. Which healthcare stocks are you buying? Now, we can't just say it was today. It's been going on for a little bit there. Which healthcare stocks are you watching? Now, we got an interesting situation going on with the transports, okay? Transports, we're talking about rails, FedEx, we're talking about airlines, et cetera, water shipping containers, things like that. We see the transportation average getting a little push after crude oil went down to 57. Now, if you own gas guzzling cars like I do, you don't hate this, okay? Now, 57. Now, obviously, if we're talking about airlines, things like that, they use oil to make the aviation fuel. So you get a lower, some cost there. And the biggest actually thing is keep an eye on those transports. The other one to kind of keep an eye on that we'll bring up here in just a moment is FedEx. We kind of made mention when you take a look at FedEx, it kind of had like a little horizontal area of resistance with a diagonal support. And that is kind of getting a little poke through the resistance line. Come back to that in just a second. Now, when we also take a look at some of these others, like what about Staples? Staples is putting up a fight. The one thing you'd have to say is in the volatility that we've actually had lately, Staples has kind of steadied the ship a little bit, hasn't made a new low in the last 10 days. Some people trying to find a little protection in that area. Real estate, for example, when you look at that for just a second, it's not at a 10-day low. It's kind of in that range in the last month or so, holding up a little bit better than the market did. When we actually talked about we bring up financials, this is actually, it broke down and now is trying to get back above where it broke down from. Now, this is the trivia, okay? You only get one guess. name the Dow stock. Okay. I'll give you a hint here. Name the Dow stock. And I'll, for example, I'll buy you a letter here. Okay. Name the Dow stock that's financially related that actually hit a brand new high here today in the Dow. You can't say it's in the Russell 2000. You couldn't see it. What financial stock hit a brand new high? 3 letters with the middle is R. Now, the reason why I kind of bring this up is now type in your answers is I'm getting some answers. I'll just fill this in. No, no, with 3 letters. Okay, 3 letters. Okay, so we're not talking about GS or JP Morgan. That's right, bingo. TV, TRV. Now, if we actually go back to this for just a second, pull it up, let me see. Now, the reason why this is of interest is you got Travelers actually hit a brand new high. Keep an eye also on American Express. Now, usually sometimes those two can go together. They've also had a little crossover there. There's a little pushback up to the upside. Now, notice how we had the sell-off last week, and we've already recovered about 60% of that. Now, this is why sometimes sell-offs are sometimes short-lived. Companies that actually make money when prices fall, you get price multiples get pushed down. Now, price goes down. Well, if you get price to actually go down, the PE multiple goes down. PE multiple actually goes down, it makes it maybe more attractive. If for example, the earnings goes up, well, you'd actually have earnings going up. Let's say over time, you get earnings going up, and let's say price is flat, you actually get a higher earnings yield. Now, for investors that kind of have some knowledge, they're like, man, I kind of like it when the price goes down, because if the price actually goes down and the earnings goes up, that earnings yield, okay, think like a dividend yield, but we're talking about earnings, the percentage could actually go higher. This is why it's very important to look for companies that have been profitable, are profitable, and have a forecast of being profitable. That they're not just a stock chart, but they're backed up by balance sheets and income statements. These are real businesses, not just stock charts, okay? Now, let's kind of talk about some examples. I want to go back to just real quick. One Dow stock we're just going to make quick mention. We're not going to look to do a trade. We did see Apple make a brand new high, okay? We did 2 trades on that yesterday. I don't have anything to say on that. Now, I do want to go back to what in the world is going on with Google. Let's start here for just a second, okay? Now, in our paper trade account, the margin in the IRA, we have an example on this, and then we need to address, is it something that we might reconsider to redo another position? Now, if we go back and say, well, what is the position? Well, we take a look at that. That position is a long call vertical. Now, I want to go back and show when was the trade entered. Where is it at now? So it's at 71%. Now, again, in my mind, I'm always thinking about if we can get, let's say, 50% in 10 days, 65% with more than, let's say, 20 days plus, 80% ever. So now I'm actually looking at this right here and saying, okay, well, first of all, how long have we been in? If we've been in less than 10 days, less than, okay, might want to take the 50%. If we've been in longer, if there's 20 days to expiration plus, which there is, do we have 65%? We do. Okay, now I want to go back and see when was this trade placed. Trade was placed on 11/10. So it's not 10 days, because that's 15 days ago. You're going to see that this is kind of the second example, where it's more than 20 days to expiration, there's actually 65+%. What we're going to do in this case, we're going to right click on that, create closing order, and we're going to sell it. Now, we're going to sell that and try to grab that $357. Sell it. Okay. Go back, right click, create closing order, sell it. Want to try to make sure we get the mid price. Doesn't mean it's going to fill there. Confirm send, note the commission, send the order. Now, I want to go back because a lot of times we'll do trades in both accounts. The IRA, you're going to see that it's in both. You're going to see on the bigger account, the 285 call and the 295 call. That's about $725, but who's counting? And if we look at that, create closing order, we're going to sell that. 2 contracts, the 285, the 295. It's 2 contracts. Going to sell that. And what we're now going to see if we do that, the one other one we have left is the 280, the 290, and that looks like it's probably pretty close as well. Now, if we take a look and see, I just want to look at this for just a moment. What was the debit there? Oh, the debit right there was $16.85. We paid that, okay? And then we actually collected $690. So the difference between those two is $515, okay? So the $515, that represents the difference between what was collected and paid. Debit, $515. Now, spread is $10, okay? 280 and the 290. So we got a $10 strike width, less the debit of $515. The most we can make is $485. We're sitting on the remaining $370. So if I look at $370 and say, okay, $370 divided by, let's say what, $485 I said? What percent? We're talking about 76%. That's still over the percentage as well. We're going to take that one down. Now, what we're going to do is we're going to close those down. And my question is to you, maybe re-up those positions. And you say re-up those positions, it just means pick out maybe a new expiration perhaps, pick out new strikes. The question is for you, would you consider that? And I'm asking you. I ain't asking Sia and Gary. I'm asking you, okay? Well, let's go back to the chart for just a sec. Let's see if there's a little something still going on. I mean, we just made a brand new high today. Now, I know what you might be thinking. Oh, it's a brand new high. Can't go any higher, okay? You know, and I kind of always try to, you know, let's imagine your bank account's at a high for the year. Do you go to the bank and say, I want to close my account because my checking account is at an all-time high? I mean, they'd probably look at you a little funny. If you went to your spouse and said, hey, our relationship has never been better, let's just file for a divorce now. That mentality is a little awkward. And I say on examples like that because people do that with stock charts. Oh, the stock's at a high, it's bearish. It's because we've been, you know, the way we think about things from a consumer. We want to buy cheap. Doesn't mean there's value. But the biggest sexy thing is if it's at a new high, it's confirmation of trend. Now, just because it's a high doesn't mean it can't go higher, because we could have said that the last 2, 3, 4 weeks, new high, new high, new high, new high, okay? And the biggest actually thing is, you know, it's kind of the way we're wired, okay? So I'm trying to kind of unwire that. Because, by the way, if you think about how many new highs the stock market had this year, those weren't bearish. It was actually many times, for example, we saw the market actually hit brand new highs. And if you couldn't unwire your mind from that, you never participate, okay? Now, what I want to do is I want to go back to this. Now, I'm going to kind of say a comment like, wow, this might be a little elevated, okay? Now, if I were to ask you a question like, well, which strategy might be a little bit more appropriate if the investor said, look, I think it's a little elevated off the moving average. Let's buy a long call. Oh, no, wouldn't think that. Let's do a long synthetic. No, I wouldn't think that. Okay, let's buy a stock position. Not necessarily, I wouldn't think that. Those are strategies that are more sensitive to direction, higher delta. If someone thinks it's a little elevated and thinks the price might pull back a little bit, which type of strategy might be kind of more able to absorb some price pulling back without kind of really killing the position? Probably would think about a short put vertical. Now you got to remember a vertical, one contract is probably about a delta of 7 to 10 per contract. So if we fall down maybe $3, $4, or let's say go down $5 down to $3.15, it's not probably going to kill the position. Is the position going to be down some? It could be, yeah. Okay, probably will be. But the biggest actually thing is we're trying to ride that trend. Now let's go to the weekly chart. What does this look like on the weekly? That's what it looks like on the weekly. Now notice the fun of the market tends to be when the prices are above the shorter term moving average and that longer term moving average. That's where the fun of the market tends to be. When it's not that fun, prices below the 10 or below both. And at that point, it's not as fun, okay? Now, what I'm gonna do is in trade number one, we're gonna go to the trade tab. And what we're gonna do is we're gonna go to trade. We got Google there. We flushed out those positions. I'm going to continue to stay in that 19 December expiry there, or expiration. I'm going to click, you got 24 days there. And we're going to come over here to the put side, okay? Now, when you look at this, you're going to see a couple hundred, 183, you got that, over 1,000. There it is. If we kind of go down and look at, let's say, which strikes, you really, in this case, have, and let's come up, pull up all. If we kind of look and see, where do we see kind of some of the volume? 10,000 contracts today on the 310s. That's so far. It's buys and sells. Now, what I'm going to do is I'm going to look at the delta of 30 to 40. You got this one, 307.5, 310, 312, 312.5. I'm going to kind of try to pick that 310. And what we're going to do is we're going to buy the 300. That's where there looks like to be a little action on the 310 and the 300. This is right in the middle of the range where we try to sell puts. Example given. We're going to sell in the paper money account the 310, sell vertical. And what we're going to do is we're going to buy the 300. $10 wide strike width, 287 credit. Come back to this and say, okay, what's the max loss? Max loss, 708. So if we said, hey, the most we could risk on a per trade basis is $750, well, in this case, we'd be doing one contract. So what I'm now going to do is I'm going to actually do that there in the IRA, and we're going to go ahead and send that. Note the commission. We're going to actually narrow the strikes for the margin account, the 310 and the 305, 310, 305, $1.55, $1.60 credit, which gives us a 343 max-ish loss. And we're going to put that in the margin account. Why are you doing a different strikes? Why are you doing a different, two different trades? Well, two different account balances, okay? Margin account has about 30,000 in it. Now, let me actually pull up, what's that balance? I just want to make sure. That's 40,000, sorry, 39,200. So if we lost, let's say 340, it's less than 1% of that balance, okay? Send that order. Now, what I want to do is I also want to go back to just real quick. I'm going to bring up a stock that we don't normally talk about, but I'm going to just kind of bring it up because there's kind of been some movement on it. GEHC, okay? Now, if we pull this up, and I want to look at something, I didn't see it this morning. In this example, I'm just looking at this. I'm just kind of looking at the example. I want to actually go back to FedEx to do this example, okay? Now, what I want to do is with FedEx, we're going to look to buy the shares of the stock in the upward trend with a brand new high, okay? Now, what we talked about yesterday is after sell-offs, you can sometimes see really these MACDs where they actually, and I'm circling the lighter red color and the burgundy, and then the lighter red color and the burgundy. So there's a little rotation where the MACD is trying to push to the upside. Now, if that momentum builds, which it's not building off thin air, it's building based upon trend and price / momentum, you could actually get those bars to actually start going in the opposite direction. So example number one here that's going to go in hand with the question that we got from Greg. I'm going to go to the trade tab. I'm going to type in FTX. Going to go to the IRA account. We're going to click on the shares. So step number one is we're going to buy the shares of the stock. Okay. Now, if we buy the shares of the stock, 272, it's about $27,000 worth of stock. Now, if I come back in and go single order, first trigger is SEQ, this is just saying do it in this sequence. Okay. Step one, buy the shares of the stock. Step two, we're going to come down here and look to the December expiration. And what we're going to try to do is we're going to try to sell, and see where there's liquidity. Now, if you look at FedEx, and if you look and see where's the open interest is there, there, there. It's not all over the table. So if we actually go down and kind of say, well, why, let's sell a 275, problem with the 275, there's only 23 contracts in the entire world. And by the way, how do you know that JP, Josh Pink, didn't buy or sell 22 of them? He could have, okay? Now, let's imagine we're going to sell this one because that's where we actually have the open interest and there is a tighter bid-ask spread. Now, think of like bid-ask spread, like you go in and buy a car for $21,000 and you say, okay, I bought the car from you now. What would you buy the car back from me now? And the dealer says $20,750, tight bid-ask spread. Well, if you're trying to buy and sell cars, you try to like to actually do it where you don't buy a car at $21,000 and then you go back to the dealer and say, what would you buy the car for me? And they say, we'll give you 12 grand. Where's the 9,000, right? That's a wide bid-ask spread. So we're trying to get in and out with a narrower spread. Okay? So what we're going to do is we're going to sell the 280. And on the put side, if we said, where's the open interest? That open interest, if we did this, we could look at the 270. Probably you're going to look at something maybe like the 267.5 and the 260. That's where we see it in terms of liquidity. Now, what I'm going to do is I'm going to right-click on the bid, sell, and we're going to go right to where it says collar synthetic. Now, that bid-ask moved on us as I talked about that. What I'm going to do is I'm going to come down here and I'm going to look at the 267.5. Now, you could run the numbers just real quick, okay? If we looked at the upside and we could just I'm just going to speak to the numbers. Let's say we buy the shares for 273, okay? If we have a cap at the upside at 280, that's $7 to the upside, but we're paying 158. $7 less 158 gives us 542 to the upside, to the downside. If you look at this, 273 down to 267.5, that's 550. And you're going to see in this case, got to add the $1.58. That's going to be in this case about $7 down. Now, if we take a look at this, that's the numbers up and down. If we take a look at this, and I want to kind of just, yeah, there it is. Now, we could write that down. I won't take the time to do that because we did that yesterday. What I'm going to now do is bring this up. This is really a buy the shares and collar the position all at once. Now, this position, like we said yesterday, it is like a vertical, but the delta is going to be about 3 times as much as a standard vertical, okay? So when I bring this up, because a lot of you said in the comments yesterday, you like kind of seeing the profile, that's what it looks like. And by the way, the delta on this one is even lower. Why is that? If the delta is not 20 or 30, it tells us that the strike that we're selling to the upside is closer to the current stock price, or the put is closer to the current stock price. In a normal collar example, it's going to be a delta of 20 to 30, okay? So if it's lower than that, it's going to be one of those two things. The short call is closer to the current stock price, or the long put strike is closer to the current stock price. Now, I want to go back to also, just real quick, a question that was asked by Greg. Now, Greg actually says, when would you exercise the long put strategy? Well, if you kind of remember thinking back to what we talked about, and we could just speak to this real quick, right? There was really 4 examples of what happens. The first 2 examples is if the stock goes up. Remember that? The stock goes up. Well, that's not what Greg is asking here, okay? Really, these first 2 is if the stock goes up, the stock goes up. 3 was if the stock goes flat, and 4 is if the stock actually went down. Now, we could almost do this like Pledge of Allegiance, right? If that stock, if we're inside, let's say, if we have 4 to 10 days to expiration, and the stock is below the long put X for strike, is that a good sign or a bad sign that the stock is below the long put strike? That's probably not a good sign. Now remember, a collar is the bull's position. So if your stock now is below the long put strike, you might ask yourself, do you want stocks below support? Does that sound like a recipe for making money? Probably not. If that stock is below the long put strike, that tells us the stock might be at a fresh new low. Does that sound like a recipe for making money? Probably not. So why not wait until the very expiration? Well, we know the bid-ask spreads, they start to widen out. Here's the bid, here's the ask, and when you go closer and closer to expiration, the volume actually dries up, and as you go closer and closer to expiration, they widen out, fills become harder. So you're trying to get out when there's some liquidity left. That's so important. I yell that because it's amazing how many times we can say that and someone says, hey, there's 2 days left, there's no liquidity. Yeah, okay? So don't say don't yell, but then don't ask me that question. We on the same page now? I'm yelling to make sure that really sticks in your mind. Okay? I'm yelling because I'm saying, be careful. Okay? Now, if that stock is below the long put strike, how does someone exercise that long put? Now, when we say exercise that long put, how do you do that? You go to the monitor page, you right-click on the long put, and you say exercise. In our example, we're not really exercising the long put. We're closing the entire position out, okay? So if you have a long put and you exercise it, a long put becomes short shares of stock. You're now short stock. That's not what we're wanting to do, okay? So in our example, and I'm going to use this case example here. Let's go back to this, and what I'm going to do is let's pull up an example. So in our example, let's pull up one, and we can answer this in 2 minutes. So let's imagine that the stock, now we got an AM, and let's imagine the stock, for example, was at 156. Okay, it's at 156. And now let's say it's not 24 days, it's 4 days. Okay, 4 days expiration. And we're following the rule set. Okay, stock is at 156 and it's below the long put strike. Well, if that's the case, that's the example that we've just been talking about. Now, what would happen with the short call? Well, of course, the short call would probably be up because the stock has fallen down. If the stock actually falls down, the mark of that option goes down because it's getting further and further away, and you've run out of time. The position, so this is going to be up, the stock is going to be down, and the gains could be on the put. Now, we're not exercising the put. We're selling the put. Right-click on that, but if you said I want to exercise it, we could say in that case, okay, whenever you actually do this, and I don't have that, yeah, there it is, right-click on exercise. If we exercise it, it's going to sell 100 shares of stock. Well, wait, if you have 100 shares and you sell 100 shares, how many shares would you have? We wouldn't have any, okay? So in our example, we're not exercising, we're just selling out. We're creating closing order, trying to sell out at the mark price, okay? And that's how you do it, okay? Now go back to this example. We'll use FedEx as the example. But when would you get rid of the stock or sell the put, call, and you're talking about, when would you exercise the long put? We just talked about that. Or sell the put, call, and shares. That all goes together with the example 4. If the stock is set to close within 4 to 10 days expiration and the stock is below the long put strike, we're exiting all of the position in the paper money account to follow that sample rule set that we've been talking about, okay? Now let's go to some other examples, but I just want to address that. Now, a couple other things real quick. I want to go back to just GEC for just a moment, okay? Now, GEC, the reason why I looked at that and I kind of didn't do that, when I looked at the GEC options, you're going to see that they're wide, okay? That one's wide, that one's 70 cents. Is every stock position going to be an option position? No, not all the time. Now, in this example, what we're going to do is we're going to go look to buy the shares of GEC. Now, this is kind of filled in a gap area. That fill in the gap area is going to be about right there. Now, you actually had gaps there, and then you had another gap there, and you had another gap there. And what you're going to see is it's kind of carved its way back to the upside. Now, here's a question for all of us. Could this be an example of where maybe the stock, now if I showed you this chart where it's gone up, 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 what would you be thinking about if that stock went up like 7 days in a row? What are you thinking about? That looks like a dadgum pull, okay? I mean, you go up that many days in a row, we ain't pulling back, and this is not Hakanashi candlesticks. You're thinking, geez, if you just made a bull flag pull. Now remember, if you make a higher high, the highest likelihood is what? A higher low. You make a higher high, and it does pull back and makes a higher low, that sounds like a part of an uptrend. Now remember, Robert and Jane will say it's at a new high, it can't go any higher. And those tend to be the investors that are they're sitting heavily in cash, watching the market or trends go up, and they just never seem to get in because they're playing mental games on themselves. So what we're going to do in this example is we're going to buy these shares, right click in the paper money account, going to go buy custom with OCO bracket. Second trade example, going to buy those shares. We'll stick with 100, okay, because the paper money can. We're going to actually set the stop. Now that support area, I'm not going to set it at the upper line. I'm going to try to give it a little bit more wiggle room. 76.44, less 2% because it's over 50 bucks. 74.91. 74.91. Thank you, Mike Fairborn, for answering that question in the chat. 74.91. Stop date at GTC. And you got the target right there. Where? Well, that target, if we kind of said if it can get above that area, where might be some areas above? We've got about 86 and change. Got about 84, 86, 87. I'm going to kind of put it right around that little 87 vicinity, okay? Dated GTC. So this is a stock trade, okay? Now, yeah, so the comment really is from Thea's GEHC out of sideways movement. Now, you might be wondering, what do they even do? Go to Analyze. Let's go to just real quick fundamentals for just a sec. And now what you're going to see is it actually talks about what it does. G Healthcare. Okay, technology, healthcare, you don't need me to go into that, okay? You're going to see that, there it is. We can get a kind of a little picture of what it actually does. And these are some of the numbers. Now, if we pull this back down below, you're going to see some of the numbers actually down below in terms of its fundamentals. Now, if I pull this back up, we're going to go date, confirm and send. This is a stock trade. Notice there's no expiration, there's no strike, no call or put terminology. Classic stock position, okay? Now, what I want to do in the last, let's say, 2 minutes is, now the comment was, do you ever use the Analyze tool to see profit loss? Sure. Yeah, we did it yesterday. This morning, we actually just did it right now. Sometimes we just speak to it, okay? If we talk about a stock position, we don't probably need to do that because this is a stock position. We can actually just see it's about 640 to the upside, and you're going to see that it's that to the downside, just the difference. But yeah, if we're talking about option, yeah, sure, we bring up the Analyze. We brought up yesterday, we brought up today. Now, I want to kind of also go back to a couple other stocks we're going to keep an eye on. Dollar General, okay? Dollar General is trying to do a reversal, kind of a basing pattern with a higher low going into earnings. Keep an eye on that. If we go back to another one, retail related, that got past earnings, Best Buy. Now, if you look at Best Buy right now, you're going to see the actual was 140. The estimate was 131. And I'm going to actually look and see this for just a moment. What do we got here? Could this be an example? Actually, not that bad here. If we actually pull this up, what I'm going to do in the last example, if we can, I'm going to look to, let's say the investor said, look, I want to try to sell a put and be more aggressive. Now, remember, if the investor says, I want to sell a put and be more aggressive, they might sell a put closer to the at-the-money strike or with a delta at the top of the range between 30 to 40. In this example, what we're going to do is we're going to try to sell the 77.5, thinking that the price might stay above that. We're going to move to the mid price of 253 and do one contract. Why one? Well, because we got to imagine the obligation is to buy the shares at the strike price. Okay. So in closing here, the last and final trade is going to be selling the Best Buy post short put example. Try to get 252 out of that, thinking that the price might try to stay above 77.5. Break even in the numbers are going to be as follows. Now, coming up next, we got Cameron May doing the next class. Join him. I want to say thanks to Michael Fairborn in the chat as well. If you enjoyed today's session, click the thumbs up button and don't forget to subscribe. That way you can see all of our content that we post right on our YouTube page. Remember that with what we discussed, it was done for educational purposes only. I want to say again, happy Thanksgiving to you and your family and your pets. Now be careful, okay? You know what the vet's going to say. Don't feed table scraps to the pets. So just make sure they get a nice bone or something like that, whatever you feed your pets as a little treat. I know Jax is asking me, what am I getting? Okay. But that said, remember that our examples were just that. Stay tuned for Cameron May coming up next. And this has been the Class on Investing Master Series. Take care. Bye-bye.